Hi, good morning, everyone. This is Yongka here. I'm the analyst for US equities. So today I'll be presenting on a US company. Okay. All right. So this US company is Perion Networks, listed on Nasdaq. Why we like it quite a lot is that we think that the true earnings and free cash flow is actually much bigger than GAAP net income, and so this is quite one of the few unique companies that is listed. Okay. So just a quick snapshot before we go into the business model. The share price today is $10.24, which is slightly on the low end of the 52-week range. Market cap is nearly $700 million and price over forward free cash flow is 8 times. So you can see the chart is actually pretty volatile because it's undergone quite a fair bit of corporate actions. As a effect, with effect from 2nd Jan 2014, it actually completed a reverse takeover, an RTO with a much bigger company, and this will go in depth right now. So what this company does originally is incorporated as IncrediMail, a messaging app that allows consumers to manage their Facebook, email accounts within an easy-to-use interface and extensive personalization with features. Okay, what happened with this is that this is very popular, incredibly popular, 90 million users, but 98% of them had the free version. So there's a need for this company to try to generate some revenue and monetize this popularity. Okay, so they actually discovered that they can generate revenue by getting users to perform searches. So what Incredible will do is they'll direct this search traffic to search engines, and they were the ones paying the fee to Perion Networks. In 2011 and 12, they also acquired 2 other companies. So in all, they expanded the total user base to 300 million downloads and 50 million monthly unique visitors. Okay, so last September, you announced that you acquired Client Connect, which is it's actually privately owned by Israel company. So this company has a critical mass to negotiate favorable agreements with search engines, and the combined entity actually today generate about 3.4 billion search queries worldwide in first quarter. So in turn, Client Connect CC, they'll pay publishers for every app that's distributed and installed by end users and incorporate it with their search settings. So publishers, they don't have to worry about monetization. They just need to focus on the best products, whereas CC will take care of the search traffic negotiation and pay the publishers for every installation. The shareholders of the RTO, they own 81% on a dilute basis. These shares are locked up for 6 months, and of which after the 6 months ends, another 90% will be locked up for further 18 months unless the share price is equal or above $15 to $22. Again, today the share price is $10.24. So there is an incentive for the shareholders to quickly reach up to $15 to $22 to unlock the share price. Net income is also dragged down. We think free cash flow is a better gauge, and today is trading at 8.1 times price over free cash flow. Of course, there are quite a few risks. So if you realize a lot of the users that are ongoing migrating to the mobile from PC, and this is a capability that Perion currently is lacking. Publishers also might stop partnering CC because competitors might offer them higher payments, although the IR, which I've spoken to, has stated that the top 10 publishers accounting for 80% revenues have been loyal and more or less unchanged in the last 3 years. Okay, it's also possible that more browsers restrict the use of downloadable software or other restrictions, such as in Google February 2013, they introduced a restriction that caused related revenue to drop 30% quarter over quarter. Of course, this impact, whichever impact is mitigated, and it really stabilized after 1 year. Agreements with search engines might not be renewed, or if renewed on unfavorable terms as well. But we think that it's quite unlikely because this company is the number 2 search distribution in US behind IAC Media. So they do, and the thing is that this search traffic syndication is 30% of the overall search revenues. Okay, so again, industry background, like what I previously mentioned, around 30% of search traffic is generated outside traditional search websites. So like say for example you use Firefox and you type into the domain, then this is one form of this 30% search traffic. You might also be searching on other websites, or you redirected there by search engines or by the installed toolbars. It used to be very lucrative, so a lot of players came to compete with it. but the landscape is increasingly competitive. The number of players have decreased, ROI have diminished because of the increased users churn rate and also of the market consolidation. Still, CC increased the number of end user searches under Microsoft Bing agreement to 2.4 billion in first half 2013, and this is up 70% year over year. We think this is a very commendable performance. Adjusted EBITDA is also up 71% on 36% EBITDA margins. So what CC, what it does is that it focuses entirely on publishers. They incorporate the search settings into the apps and are paid each time these apps are installed. So again, they just have to focus on the development and the distribution on the end users. And they don't worry about how to charge these end users because most of them are not willing to pay for the premium version. The end user search traffic is then channeled via the CC default homepage to the search engines, and they are the ones who pay CC as per the search revenue agreements. So you look at the diagram, actually this completes the money flow. CC also has critical mass to negotiate favorable terms. So 2.4 billion search queries in first quarter 2014. So that's like just number 2 behind the IAC media. And actually this ranks it ahead of the search engine AOL. So we have a few merits. Okay, previously publishers were paid on a pay per user basis. Okay, so based on the number of active users, but in the third quarter of 2012, CC changed the payment model to pay per install. Okay, so what happens? The implication is that all the traffic acquisition cost is expensed upfront when the users install apps. But of course, we know that the search revenue is generated only when the users subsequently perform searches. So the mismatch in revenue expense recognition timing penalizes the Perion P&L in the near term. Furthermore, there's generally elastic demand for this traffic acquisition cost spending. So higher fees per downloads also motivates publishers to recruit more users, and also this recruits to higher search revenues. This effect of higher spending will only flow down to the bottom line in the future quarters. We're also looking at the unlisted earning power. Because of this acquisition, purchase price partly accreted to intangible assets. So you have amortization expense increase, and then you have your acquisition-related expense increase as well. As a result, net income fails to adequately reflect the underlying cash flows. So we think that if you look at free cash flow instead, and this ignores all the working capital fluctuations, receivables, payables, for example, free cash flow is actually a better gauge and amounted to $85 million annualized for 2014, and this hasn't factored in any benefits from the increased TAC spending. Currently, Perion trades at 8 times free cash flow. There's also economies of scale. 30% of search traffic is generated outside traditional search sites. So this is a market that Perion continues to operate in. Okay, just first quarter alone, the new combined entity generated 3.4 billion search queries and 2.9 billion ad impressions worldwide. Okay, so it has an improved position to negotiate when agreements are up for renewal and also attract more publishers to work with the diverse product portfolio. Integration is also well on track. And lastly, Perion has launched a few initiatives targeting the online ad markets. Okay, so we didn't factor this in the evaluations, so we're not going to discuss further in this webinar, but you can refer to the report for a brief summary of what CodeFuel and Lightspeed does. And we think this is really promising because this is a very big market. It's in tens of billions of dollars, and they appear to have the first mover advantage. The lockout agreement is pretty interesting. So of course, usually it's a standard clause that you lock up the shares for the first 6 months, but for the next 18 months, the shares, 90% of them will still be locked up unless a certain share price has been achieved. So you can see that anything from 1/3 to 100% of the shares can be unlocked if it hits 10 consecutive trading days, $15 to $22. So there's two implications. One is that this reduces a huge overhang until it could be as late as 2nd Jan 2016. Unless the share price increases substantially. The other one is that tax ruling stipulates that only 2.94% of the shares can be sold before 31st December 2015. So of course, given that this tool, there is a huge incentive to preserve shareholder value and also to try to hit $15 to $22 share price so that they can unlock their shares for resale in the near term. Management is very experienced. The CEO joins Incredimail in July 2010, put together a few acquisitions to diversify user base. Okay, so what happens is that the revenue has increased 200+%, and the share price has increased 120% since he joined in July 2010. Okay, then Josh Wine, he previously was a Conduit. Conduit is the shareholder for CC. He joined as the Chief Revenue Officer before joining Perion as President in January 2014. So in 7 years, he turns Conduit from the first into the first Israeli startup with $1 billion valuation. Okay, what I want to highlight here is that this is one of the rare tech companies that is actually immensely profitable. In 2011 to 12, they earned more than $1 billion of combined revenues, and net margins exceeded 50%. Even dividended $418 million of excess cash back to the shareholders. Okay, so this is how it achieved the $1 billion valuation rather than through the typical M&A or VC fundraising. So lastly, JP Morgan purchased 7% of this company from an existing shareholder for 100 mil. Okay, so this valued the entire company at 1.4 B. CC, because it accounted for more than 99% revenue and more than 100% of net income, so we think that CC is actually the bulk of Conduit's value. So we're factoring all our adjustments, the net income earned, and you subtract away the dividend payouts and cash balance left behind. CC should have been worth $1 billion, but instead the shares today are worth only about $600 million. Okay, yes, in the same time, the number of searches, one of the metrics that we see is that one of the number of searches conducted by the end users in US increased 70% year over year to 2.4 billion in first half 2013. So we don't think that there's any substantial value impairment because of this. Okay, so if the CC was valued at $800 million instead, Perion Networks, which is the company we are talking about today, could easily be worth 25% higher. Quickly, we'll gloss through the historical financials. Okay, 2011 and 12 are not really comparable because they signed exclusive search agreements with Microsoft Bing, who can afford to pay and is willing to do that because they are very eager to grab market share. So this entitled conduits to windfall revenues and profits in 2011 to 2012. 2013 is the year where the exclusive agreement expires and the search revenue normalizes. So this is forecasted to increase 13% year over year, same amount for free cash flow as well. In the meanwhile, traffic acquisition costs actually ramp up and expected to increase 30% year over year. And we expect that the effect of higher spending will flow down to the bottom line. The extent of it, we are still not too sure. We are still monitoring, but it's almost certain that there will be an increase in profitability, all things being held equal. So peer valuations, we've selected, these are the public listed companies which mainly deals with the search revenue industry. So we have IAC, AVG, which is the antivirus, as well as Blucora. So Perion is currently trading below peer means and 22% below the lowest Blucora, which we consider to be the closest in terms of size and business model. All three peers have also executed share repurchase agreement. Perion, we expect it to do so also once the shareholder lockup agreement expires. Okay, again, you look at the charts. Interactive is 10.1, AVG is 10.2, Blucora 6.8, and Perion is 5.3, which is the lowest among all these peers. So if Perion was to trade up to Blucora's 6.8 times EV over EBITDA, it would be worth around $12.50 per share. But Blucora has a more diverse product portfolio. It does e-commerce, it does tax filing preparation, and this lowered the overall EBITDA margins to 19% versus Perion, which is achieving 27% right now. Furthermore, the users of the old Perion is much stickier. So I mean, they are very loyal. There's 90 million users, and at any one time there's around 10 million active users. So that alone deserves a premium. If we use a higher peer mean of 9 times multiple, again, this peer mean 9 times multiple, then this could be worth $16.50 per share. But if we conservatively use a multiple that's 20% below peer mean and 10% above Blucora to reflect the higher EBITDA margins, 7.5 times EV over EBITDA, we think that Perion will have a target price of $13.80 per share today, which is 34.3% potential upsides. So just to summarize, Perion's networks, listed on NASDAQ, has since transformed into a formidable entity, generated $2.4 billion search queries and 2.9 billion ad impressions worldwide in the first quarter 2014 alone. The company is led by experienced management, and shareholders with an 81% stake have committed to a 2-year lockup unless the share price rises beyond $15. Okay, so only if the share price rises beyond $15, then the shareholders can start selling more of their shares. Today, the share price is nearly $10 only. The ramp up in costs, which is expense fully upfront, they are not yet reflected in the P&L, and even then we expect Perion to earn $85 million free cash flow based on what we see in the first quarter. Code Fuel and Lightspeed, they deal with mobile apps monetization, distribution, and promotion. They are initiatives that we have not factored into our valuations, but they are very valuable co-options. Again, if you're interested, we have a brief summary of these initiatives in our reports. We encourage you to read for more background information and also to see how big the industry is, and it's rapidly growing, and we expect it to surpass the desktop search by around 2016. At 7.5 times EV over EBITDA, which is 20% below peer mean and 10% above Blue Coral, this Perion Networks will have a target price of $13.80, which is 34% above today. That being said, there still exists quite a few risk factors. So Perion lacks mobile capability. It doesn't. It's also operating in an increasingly competitive landscape, which it has so far managed to outperform. The number of searches is up 70% year over year. There's also lower ROI on marketing spend. So this is a typical high risk, high reward investment in the tech industry that is very susceptible to disruptive improvisations and new technology. So we advise clients to just size their positions accordingly and to keep a very close eye on this company. Okay, so that's all we have for this US company. Do you have any questions regarding the US counter or our US stocks under coverage, Singapore companies? Just feel free to ask right now. Thank you.
Hi, Benjamin here. Got a question on Croesus Retail Trust. Lucas, our analyst covering this, is currently not around. So in his last report, he forecasted distribution yield is about 9.2%, and the price target has been revised upwards to $1.12. So that was about a month ago.
Hi, we have two questions on SodaStream. So it says that the share price has been in the downtrend, is slowly being changed to sell. And the question is that whether we have any comments on SodaStream price action. Okay, right now our analyst who's covering SodaStream is not around, but from his brief notes, you can see that the international this market is actually expanded quite a lot by double digits, whereas the US is still struggling. So maybe we can pose this question again for the next webinar, and we'll get the analyst covering it to reply you. Thank you. Again, we have another question regarding Valuetronics, and it's reached the target price today as forecasted last week. Is there any revision of the target price? Okay, the same analyst who covers SodaStream also covers Valuetronics, and he's not around today, so we are not able to comment on that. Ling Xiu Sama, you all have any comments about the Singapore market, any sectors? Huh? Yeah, any sectors?
I have a question on Capital Corp. Any particular reasons for the recent weakness in share price? There's no particular reason for that, but on an overall basis, the general sentiments for the offshore and marine sector is that slightly more bearish, right? Because most of the national oil companies as well as the international oil companies, they are cutting down their E&P spending. So we expect these two have some bit of a downward pressure on this segment. Yep.
Hi, we have a question on Perion Networks. What's the NAV? It's currently trading at around 2 times NAV. Okay, but that being said, do bear in mind that tech companies, a lot of their assets they are not capitalized. For example, traffic acquisition cost is fully expensed up front. In fact, CC, they only have about $30+ million of assets when there's a reverse takeover, but they actually earns about $100+ million of net income in that year alone. So I would advise against using NAV as a gauge for whether Perion valuations is attractive, and that's the reason why I didn't feature it in today's webinar. Hi, there's a question on whether any stocks in our coverage that we consider are stocks that can buy and hold forever. Stocks with qualities such as J&J, okay, Johnson& Johnson, Procter& Gamble, Clorox, and DIS that you can just buy and hold for a long, long time. Okay, this is just my personal opinion that at the end of the day, it's all about the price. If the price is right, then you might want to let go. Okay, so for example, if you think that this is the target price that you hit in 5-10 years time, but if because of some market rally you actually achieve it next year, then it might be better to exit and recycle the proceeds into stocks with better opportunities. Why this buy and hold mentality used to work last time is because business cycles are much longer, and then the information is much less available. So if you have a competitive advantage, for example Walmart, if you have a competitive advantage, you can keep doing that for years, decades, and no one really finds out. But nowadays competition is information is so readily circulated. So once you discover something that works, like Six Sigma for example, every other company is all fighting to adopt it in the next few years. So again, back to your question, buy and hold is all dependent on the price. At the right price, you can hold forever. But if the price is right, you might also want to consider selling if there are better opportunities out there. Thanks. Okay, back to the buy and hold again. So the audience also asked whether something like VCom will qualify, because there are many companies, there aren't a lot of companies like this with white mode and good management. Again, VCom, okay, because we don't cover it, so I can't really comment whether the price today is attractive. Okay, what I see is that the share price today is $5.95. So if you are using a buy and hold, right, which means that you don't bother about the price at all, do you think it would be a sell at $15, $20 versus today $6? I mean, it's all the audience discretion. If you can find an opportunity and reinvest it better, you get a 100%, 200% upside, then maybe $15, $20 will be a good sell. Yeah. So this is all very subjective and individual. Is $1.25.
Hi, Benjamin here. I have an earlier question on which sector is favorable in the Singapore market now. So I'm the financials analyst. And next week I'm actually doing a presentation on the Singapore banking sector. The last time I presented on that was about half a year ago, which currently our call is still a major overweight on this sector for a couple of key reasons. Number one is that the interest rates are still pretty low now, as we expect interest rates to be revised upwards, especially on the 3-month SIBOR side. We expect this to give a very positive impact on the net interest income. Right, and in terms of in the earlier part of the year, where there were quite a lot of concerns on the China exposure for DBS as well as OCBC, seems that these concerns have eased off quite a little, and China's increasingly turning quite positive on the macro front, based on the news that's been coming out over the last few weeks. Right, so based on that, we expect the trade finance income to improve as well. Right, so Singapore banking sector is still on a major overweight. Then I have another question on Pacific Radiance. Has been moving up steadily, goes up 5 cents today. Currently, unfortunately, we don't cover Pac Radiance, but we have met the management before. So for Pacific Radiance wise, still more of an offshore support vessel play, and I will see that the OSB sector is pretty much more positive, right? Because actually the OSV to the rig count ratio has been falling. So we see we expect increasing demand for OSV. So counters like Pacific Radiance and Nam Chong should benefit from this. But in terms of target price wise, as I say again, we don't cover Pacific Radiance, so no advice or no comments on whether it's a good time to take profit.
Hi, this is Colin, the telco analyst. To further add on to Ben's answer to the favorable sector in the Singapore market, we are still rather bullish on the telco sector, as one of the key reasons is mainly coming from mobile data monetization that is gonna give growth to the earnings for the 3 telco stocks. Not sure if you have realized, but M1 has recently updated their website that they will likely be ceasing the waiver for the 4G promotion from next year onwards. So, however, the actual price increase for 4G plans is not yet disclosed. So we expect going forward, new subscriber will have to pay additional subscription fees for usage of 4G. So this is gonna give add on to the growth in the mobile ARPU, and hence it's gonna grow its mobile revenue. So we are M1 is still our top pick among the 3 telco sectors. However, for Singtel, though we are bullish on the Singapore mobile business, it's still gonna face headwinds from currency fluctuations, as well as the outlook from the Optus business.
Okay. We have a question about Olam. What will happen from now on? So if you went through the SGX announcements, which I think you did, you have seen that they actually Temasek and the associates now own more than 50%. Okay, so this means that Olam is now indirectly owns subsidiary of Temasek. Okay, well, the implication is that I mean they are going to get a lot of cheaper financing. Temasek, the borrowing cost is really low. So Olam will be able to leverage on. I mean, they can get a better parent backing to get a cheaper borrowing cost to finance all their capex that is upcoming. Uh, okay, that being said, right, this just makes Olam more creditworthy. Whether the share price is a buy or sell, that is we don't currently cover it right now, so we can't opine on it. Thank you.
Hi, we have a very light-hearted question on if the winner of the World Cup will have a positive effect on their stock market. There's any credibility to that? I think in the end, we should fall back on how the countries are doing as well. I think there's a couple of statistical studies that been saying that the probability of Brazil winning is the highest for the World Cup coming up. Right, but if you look at the Brazil labor market, it has not been performing very well over the last 1 year or so. So, for example, some of the shipyards in Brazil have been seeing quite a few problems from labor union strikes and riots and protests as well, fighting for higher wages. And actually, the World Cup has been giving it some problems as well. Like more than 60% of Brazilians have been expressing their dissatisfaction of the World Cup being held there. Right, so I would say in the end, it still depends on which country wins. Right, but if you guys have any tips on which matches are good to bet on, you can share with us as well.
Hello, there's a question on the comments on Sabana REIT's portfolio. For Sabana REITs, sorry, but we do not cover on this. But from what I understand, for industrial properties outlook for Singapore, for the coming near term should be remaining quite weak in this sense. It will take a while for vacant properties to actually the take-up rate for to actually the vacant properties to be taken up in near terms in this sense. And with the new upcoming supply, it will be a while. For Singapore, we still think that the retail, hospitality, and office should remain strong for Singapore in the property sector. Thanks.
Anyway, just for the fun of it, right, regarding the question just now about any stocks that is buy and hold forever. So I can just want to refer you to Coca-Cola. The share price last peaked in 1998, about 1998, and only recently surpassed the previous peak. So for 15 years, you wouldn't have earned, if you have bought and held at the time, you wouldn't have made any money. So I mean, I just want to illustrate that not every company is a buy at any price, and sometimes when you think that the price has peaked, it could be worth selling, even for Coca-Cola. Thanks.
I have a question on SingPost. Is it a buy? Currently, we also don't have coverage on SingPost, so we will not be giving any ratings, be it buy, hold, or sell on this. But longer term wise, the investment of Alibaba into SingPost, right, definitely should be more positive long term. Let's give them more exposure in the e-commerce space for China, right? But in the near term wise, just watch out for any dilution effect on the shareholdings. Yep.
Regarding HPL, okay, there's a question regarding HPL and Wilong. Okay, our real estate analyst currently is not around at the moment, but this is my personal take as well. Okay, this is Yong Kai here, by the way. HPL and Wilong, okay, Wilong and they've actually been increasing the offer price for HPL for quite a while. So originally the tender price was $3.50, then went up to $4 and $4.05. So we think they're actually expressing very strong interest in I mean very strong dedication to the valuation for HPL. What will happen after the tender offer closes, we don't know, but we think that this creates a flaw. At least there is a lot of buying demands from the majority shareholders at $4.05. And of course, there's a lot of ongoing stories about Orchard Road properties redevelopments, Four Seasons Hotel, Hilton, for example. And this is something that you can look out for if you still believe in the Singapore real estate market story. Thanks.
Hi, there's a question on Golden Agri. From what we see for Golden Agri, okay, actually Golden Agri has a few business segment on the whole. The plantation side currently is the price for the CPO is quite weak, but we believe in the second half of the year it should be moving upwards because we foresee that the production output for CPO will not be as good as expected in this sense. However, in terms of the other business sectors such as the oil crushing margins and the refinery margin, these two sector outlook is we feel that it's going to be weak even in near term wise. So our recommendation currently is actually to hold in this sense. Is our recommendation for the Golden Agri is to hold in this, not really to actually go in or sell right now in this sense, but should the price actually move upwards in short term or anything, perhaps you could actually consider selling off and move in when it comes down. Okay, thanks. Hello, what is the short-term outlook for Wilmar? For Wilmar on the whole, Wilmar business for the last quarter were actually affected by the oilseed crushing business in China. It was actually kind of pulled down from there, mainly because of the demand for the soya bean, and also the supply there is actually not in the company favors on the whole. But from what we see, actually the price has been actually down for quite a while. We feel that currently we feel that based on our previous target price is actually about 3.6 or so. So we feel that currently the price is rather pretty weak in this sense. There is still possible upsides should the business actually improve, but what we feel that in short term wise is actually the outlook is still going to be quite weak in this. The margins is still going to be quite weak. So you might want to hold on for a while before you move in for Wilmar in this case. Thanks. Hello, there's actually a question on any chance to share your view on Noble Group on sale to Noble Agri to the COFCO on this. I'm sorry, because for this we do not really cover on this and we can't really actually comment on this. Thanks. Hello. For CPO outlook for previously, I think about last month when I presented on this, my outlook for CPO is actually for this year is going to be neutral in the sense but starting from the lower half of the year to early next, it should be moving upwards. Should be more positive on this. Mainly, actually, everyone is waiting for the effect of El Nino, the confirmation of El Nino to come. However, even with the El Nino confirmation of this, the effect on the output will not be that immediate. So we believe it will only more or less affect the production output starting from the later half of the year or early next year onwards in this sense. For the price of CPO for golden agri the movement upwards definitely is going to be positive in this sense. But as I mentioned earlier, golden agri not only affect the the margin come from a few business sector. Currently, right now is the dragging part on the price is on the margin is actually on the crushing and the refinery margin. For this, we feel that it's still going to be weak at least for this year. So that's why on the whole on golden agri outlook we are rather neutral on it. Thanks.
We have a question on US market. Sorry, Benjamin here. We have a question on US market and Singapore market as well. So currently, Kenneth, our market technician, is not around. So probably next week we have better time for him to answer the question more in depth in terms of from a technical point of view. But from just a couple of quick comments, the macro data for US, China, as well as Japan has been doing very well. Right, as of last week, Japan's growth was pretty high in the first half of the year, and non-farm payrolls came in very strongly as well on Friday. And for China, their export data is looking quite sound, right, better than expected. So that's probably what's been driving the US markets as well as Singapore markets lately. But just a thing to note on the Singapore market side is that the volumes traded as well as the total traded value has been looking pretty weak, even despite the rally in STI. Right? Our daily traded value, we're looking at about 1B to 1.1B, which is still very low, right? Which is a bit of a signal of more weakness, still quite a bit of weakness in the market, Singapore market. Yep.
Okay, just now someone asked regarding the Olam, whether if those accepted cash offer should have received confirmation. Okay, this one we really have to check with the back end, check with the broker, because we don't, this research we don't really know anything much about it. Yeah. Okay. That's all the questions that we have tried our best to answer. For the rest, we apologize because the analysts who are covering the various sectors or the macro are not around today. Okay, thanks for joining us for today's seminar, today's webinar. Look forward to having you next week as well. Thank you.